Hello, everyone. Good morning, and trust you all having a good week so far. And I'm excited to welcome you to our final edition of the Forex Money Mastery for this week. First of all, we were not able to anchor the Forex Money Mastery at our usual time. That is 8:30 a.m. UTC, 9:30 a.m. West African time due to internet reception issues. And like I did say, in my last session, I continue to experience difficulty in accessing the internet in my new location. I've tried a bunch of ISPs, but thank goodness one of the ISPs had to send in their engineers this morning to resolve this particular network. But at the moment, it's doing very well, and I do hope that this will continue as it is. I'm very excited to join you and be part of your last trading session. I'm very glad to have you around with me this morning. So, we shall be delving into our usual assets for the week, which includes the US All Spot, the USDJPY, and of course the XAUUSD. And we will be looking into how the market participants are thinking currently based on the financial dynamics in the global market, and of course use this data in conjunction with the expectations surrounding market participants rounding up their trading activities ahead of the weekend. We are going to take all of this into account, lining up with what we see on the chart to give us a distinct understanding of what is going on, and of course use all of this data to strategically position ourselves for the next move. So this is what we are going to be doing here today. And for those who are joining us for the first time, I'm very excited to have you here with me this morning. This is not our usual time. This is coming in way very late due to the technical issues we experienced in earlier, but it is better late than never, of course, they used to say. So I'm very excited to welcome you. And to intimate you of what this is all about, the Forex Money Mastery is an educational avenue where we come together 3 times in a week to look at the financial market together. That is Monday, Wednesday, and Friday to strategically position ourselves for the next move. So you are highly welcome on board, and I'm very excited to have you around. So feel free to engage in the comment section. If you have any questions whatsoever, drop them. No question is insignificant. I'm here and willing to be of help in that regard. So with that said here, let's dive right into the business. And of course, the first thing we normally do in this community is to keep tabs with the market dynamics around the US dollar. Of course, we know how important the US dollar is to all of the assets we are monitoring. There is no way you want to be trading the US all sports, the Japanese yen, and the gold commodity without really understanding how the market participant, or how, let's say, investors are thinking about the US dollar. Now, in the last in recent times, the economic event from the United States were a little bit better than expected. For instance, we saw the initial jobless claim count coming in yesterday with a whooping 227,000, which was way below the market expectations of 230,000. Now, of course, this is seen as a positive signal the labor sector is thriving, which is a very positive signal for the US economy. And then we also saw the S&P Global publication, which comprises the manufacturing and services PMI. So this gives us an insight into how well these two sectors are doing. And of course, it's an index which is between 0 to 100, where anything above 50 is considered as a positive signal. That is, the sector expanded in the last 30 days. And if the data comes in below 50, it shows that that particular sector had contracted. Now, from the figures we got yesterday, you will see right here on my screen, we had 52.3 for both the manufacturing and services PMI, which was way above the market expectations and of course beyond the previous month data, which further gives some level of hope to buyers of the US dollar. However, it is not cast in stone yet, as we've had a bunch of other fundamental factors which had negatively influenced the US dollar in the last 1 week. For instance, the recently passed $3.8 trillion tax and spending bill by the Trump administration has intensified concerns about the sustainability of US fiscal policy, leading to a downgrade of the US credit rating and exerting downward pressure on the US dollar. Now, this has caused investors to reduce their exposure to the US bonds due to fear of escalating debt, trade policies, and diminishing the dollar's appeal at this point in time. And if we look at the DXY here, that is the US dollar index, this is the 4 hours time frame you're seeing on my screen, you will see that since last week, 13th of May, we saw how the price of the dollar continued to drop significantly, as you will see, lower lows, lower highs, all the way back into that structure around the $99.20 level. Remember, this was serving as the neckline of that potential reversal pattern we saw about 3 to 4 weeks ago, where we saw price break out of that structure, and right now price is back into that structure, making it a crucial juncture at this point in time. Now, the question going into the weekend is, will this level become a platform that will support the US dollar going forward, or will this level be breached, broken to the downside, and of course pushing the value of the US dollar to the downside? Now, the trade policy uncertainty which is going on right now, that is the introduction of new tariffs and trade tensions, particularly the Liberation Day tariffs, so it is called, have disrupted global markets and contributed to the dollar's decline. Now, I do not know at this point, will this area be a supporting factor, or are we going to see a situation where price will drop back into this trend line, maybe in an attempt to continue the US dollar recovery? Now, it looks as if the US dollar does not have any hope at the moment, but we cannot ignore the recent strong economic indicators that we saw, including the robust PMI figures, declining jobless claim counts, which obviously suggest economic resilience, further providing support to the dollar at this point. Now, while rate cuts are anticipated in the United States, any hawkish signal from the Federal Reserve today or in upcoming weeks could also bolster the dollar in the short term. Now, going into today, Friday, May 23rd, we're looking forward to a couple of Fed officials speaking. We have one coming up in about 58 minutes from now. that is Musalem. We also have Schmid. Then later in the day, we are looking at Cook speech. Now, all of this here will be a driving factor for the US dollar. So we are going to stay tuned into any form of US fiscal policy announcement, as further spending increases or debt concern could impact the dollar strength. Then we're also going to pay attention to Federal Reserve statement, meeting minutes for indications of policy shift that could influence the dollar significantly. Then, in times of heightened geopolitical tensions, safe haven flows may either support or undermine the US dollar depending on the nature of this risk. So, we need to be very careful. Though the US dollar is under pressure as fiscal concerns and trade policy uncertainties continue to weigh on investors' confidence, marking its first weekly decline in over a month. Now, since we're at a critical juncture right now, I will say, based on all of these factors we've talked about in conjunction with the technical structure we see here, we may likely see the dollar drop further, maybe into the next structure around the descending trend line, where, depending on how price reacts to that structure, will determine if we'll continue the downtrend or get ready for the second leg of the bullish move. Now, with all of this information we've gathered here on the US dollar, let's delve into the asset we are monitoring for this week to see how the dollar is influencing the sentiment around that market. So the first asset we are going to be taking on this morning is, of course, as always, the USOILSPOT. Now, we are at a critical juncture in this market. And of course, if you look at the bottom of your screen, you will see that I already have a buy position triggered in this market. And I will be explaining to you in a moment why that is. Why have I bought the USOILSPOT? Now, though the last week, since the beginning of this week, remember we sold on Wednesday. That was around the $62.60 level. If you remember, price broke down that ascending trend line. We were able to capture this old 140 pips move. Remember, TP target was around the $61.25 level. This one right here, I missed it, but we took this one. Definitely, we're on the positive side of our portfolio. Now, even though the oil price remains under pressure, as supply fears outweigh demand, and Middle East tension is also looming large at this point in time. Now, one thing I noticed on this chart is how, despite the strong bearish momentum we saw throughout this week, price had found it difficult to break through the $60.50 level. As you can see here, every attempt by sellers to break through has always been met with strong resistance from the buyers, making it a strong or robust demand zone, at least in the meantime. Now, if we consider the factors that had influenced the bearish forces in this market, like the OPEC Plus aggressive ramping of production, which started this month from about 411,000 barrels per day to 2.2 million barrels per day, that's heavy supply pressure entering a market already nervous about demand. Now, of course, this definitely is a bearish factor to the market. Then, when we look at the EIA data during the course of the week, which showed an unexpected build of 1.328 million barrels, let's look at it together here. Okay, so I think I have to include the low impactful event. That is where we'll find the EIA and the API reports. So, okay, so this is the EIA report here. Is this the one I'm looking for? No, I don't think so. Hold on a sec. Okay, this is it here. The EIA crude oil stock change, which came in on Wednesday, we saw a 1.328 million barrel increase as against the expected drawdown of a deficit of 1.85 million. Now, that's a major miss and adds more short-term pressure on crude oil. More reasons why we've been seeing downward pressure in this market this week. Then the slowing demand growth, especially from China and emerging markets, keeps sentiment cautious even with global risk in play. Now, from the look of things, it appears that we should continue to sell, right? We should continue to sell considering these fundamental factors. However, the fact that the sellers are unable to break the $60.50 level should bring some red flag on the table. Now, if we look at the Middle East tension, there is, was it not yesterday, we learned that the US intelligence indicates Israel is preparing to strike Iranian nuclear facilities. Now, any military escalation in the Middle East, which is an area which is responsible for over 33% of global oil supply, could disrupt flow and drive prices higher. Then, just the possibility of an Israeli strike injects a risk premium into oil prices, especially with Iran in the crosshair. And traders will price in supply fears before anything happens. So in that regard, we may likely see price climb high. Now, with this information here, I was able to identify a simple structure right here on the 15 minutes time frame. This is what I did this morning while I was looking at this chart. First of all, I did acknowledge the fact that price has been on a strong downtrend. Price has really dropped significantly. I missed putting my stop loss at break even, so I missed out on that one. I'll just allow the market to play out. So looking at the structure here, this was the first thing I did observe. I noticed here that price had consistently found lower lows and lower highs as a result of those factors I mentioned earlier. OPEC plus output surge, US crude oil stockpile buildup, demand concerns, and of course diplomatic hopes with Iran, all of which are driven the price of oil to the downside. And from a technical perspective, this is reflected on the chart as a series of lower highs, giving us a beautiful descending trend line to work with ahead of today's session. And of course, you know how we treat our descending trend lines. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that support selling ideas. But if this descending trend line is breached and broken to the upside, then can we start considering buying ideas? Now, if you zoom into the current structure here, which was one of the major reasons that made me to buy the US crude oil, we saw what happened during the early hours of today. Price did break out of the structure all the way up into the $61.25 level, as you can see here, resulting in that massive move. That was about how many pips that was? That was about 50 pips. And unfortunately, I missed out on it. And I just got taken out. I missed out on moving my stop loss to break even. Now I just got taken out in a loss instead of being taken out at break even. But it's okay. We are all good. Now, price is back into that trend line. Let me extend the trend line out a little further. So price is back into the trend line here. And from a theoretical standpoint, it is expected that when price breaks out of a key structure like this, we expect price to come back, retest the structure in an attempt to continue the uptrend move. Now, will this be the case at this point in time? No one knows, but depending on how price reacts to this trend line will determine what our next line of action will be. Now, to help us navigate this critical confluence, I have a range-bound structure here that is between the $60.50 level and the $60.20 area, where depending on what happens around this confluence will determine what our next line of action will be. Now, as it is, price had already broken down the $60.50 level, as you can see here, taking out all the buy positions around this area, but I will not want to jump into a conclusion that this is a bearish signal all the way. Why? This area has been a strong demand zone for about 12, 13, 14 hours or so. And now the price breaks down the structure, we'll need some confirmations to happen before we consider selling. It may happen, it may not happen. But if it does happen, we want to look out for selling ideas. So I'm going to see price come back, retest the structure, giving me an opportunity to sell from this area. But it appears this momentum is getting stronger by the day, and it appears that sellers are beginning to lean towards bearish ideas, considering the increased U.S. crude oil stockpile in the United States, demand concerns, of course, and pushing price further to the downside. So I've missed out on this one. So what I will do right now, if you're in my shoes, I will advise that we exercise patience and wait for price to come back, retest the structure, and then we can start considering selling the US crude oil. Of course, we do not want to jump into or in front of a moving train right now. So let's allow the train to move, come back to a bus stop, and of course, join that decline from that particular area. So the factor that will further support this bearish setup is if there is any resolution talk from the US-Iran room meeting. There is a meeting ongoing right now, US-Iran situation. And of course, if there is a resolution, we could see price drop further. OPEC supply outlook too is another thing, until we consider selling as long as this is in play. Now, if I want to buy, if this bearish setup changes direction and it begins to favor buyers, I will only look out for buying ideas above the $60.70 level. All right, so I want to see price climb back above the structure for me to feel comfortable joining that uptrend move. So that is basically what I am looking at on the US crude oil at the moment. Like I said, I've missed out on this breakdown. I want to see price come back, retest the structure. Then I will love to join that downtrend scenario. But if the momentum shifts again and price climbs back above the $60.70 level, then I will be shifting my focus to buying the US crude oil. So that is basically what I am looking at on the US crude oil for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So, in the absence of no questions, I want to assume that we are all on the same page. So, as you can see, sorry about the music. So, in the absence of no questions, I want to assume that we are all on the same page, right? And as you can see on the chart, we are at a crucial juncture. And like I said, I want to see price come back, retest the structure. When I scaled down into the 1 minute time frame, I actually saw price retesting the structure, and that made me to put up a sell position, which you are seeing right now on your screen, though it's currently running in a loss of about 50, is it 2 pips, 5 pips thereabout, which is at the moment. And one thing I'm looking at here is that since price has retested the structure, we may likely see price break down the previous low here to continue that downtrend move. Now, if that is not the case, we may see price do a reversal setup here, maybe like a double bottom structure where this area around the $60.50 level becomes a neckline that will incite a reversal move to the upside. So I will place a buy stop order above the $60.50 level, and then let's see what happens around this area. We want to see who's going to win the negotiation here. Is it going to be the buyers or the sellers? Whichever case it may be, we are ready and on standby to capture whatever direction the market is playing here. So I have a buy stop order around the $60.53 level. We have a sell position triggered, stop loss in place. Now let's see what happens around this area. So I want to wish us all the best of luck on the US All Spots. So I will be moving on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at is the USDJPY, and of course I just missed out on this move, as you will see on your screen right now. And the Japanese yen continues to do very well. It's right now rallying near its 2 weeks high as hot inflation data and Bank of Japan rate hike bets clash with a weakening US dollar at this point. Now let's look at the economic event from Japan. Yes, was it through the course of the week? We had some impressive figures. First, the most here is the what's it called again? The CPI data. When was that? I think it was yesterday, isn't it? Yes, it was just yesterday, as you can see, around 11:30 p.m. UTC, where we saw the April CPI coming in at 3.6% year on year. And then we saw a core CPI at 3.5% right here, which obviously beats market expectations, strengthening the case for continued Bank of Japan monetary policy tightening. Now, with this scenario in play, the Bank of Japan officials are now signaling openness to further rate hikes if the economy stays on track, reinforcing the demand for the Japanese yen. Now, if you would ask me right now, the path of least resistance for the Japanese yen remains to the upside. That means that the USDJPY will be on a rampage sell from a long-term perspective. Then if we look at the expectations of wage-driven inflation, that is, higher wage forecasts are expected to sustain price pressures, which could keep the Bank of Japan's hawkish tone in medium term. Now, look at, so we saw the services PMI also, we saw the machinery orders, all were positive from the Japanese economic docket. We saw the imports coming in at a deficit of 2.2, way higher than the previous, the market expectations, though a little bit lower than the previous month. So we have some not good figures from the Japanese economic docket. Now, the progress in the US-Japan trade talks, we have a meeting coming up on the 30th of May for a negotiation with the United States, which is seen as supportive for the yen at the moment. Then the ongoing Middle East conflict and unresolved Russian-Ukraine situation are reviving safe haven flow into the yen at the moment. So all parts right now leads in favor of the Japanese yen, as you can see here. Now, while looking at the charts and taking into account the character of price action since last week Monday, is it last week Monday? Yes, last week Monday, you will see that the market had consistently found lower lows and lower highs, which further reflects these fundamental factors we talked about here. So you can see price continue to find lower lows, lower highs, and as a result, we have a beautiful descending trend line to work out with. Though price broke out the structure here yesterday, but as you can see, price is back below that descending trend line, which makes it clear that this descending trend line is going to be a key determinant factor in deciding where price is likely going. So of course, you know how we use our descending trend lines. As long as price remains below them, we definitely want to be looking out for patterns and structures that support selling ideas. So at the moment, I think that the USDJPY remains vulnerable below the descending trend line, and it could drift towards God knows where. If risk sentiment stays fragile and Bank of Japan rate expectations hold, the sentiment will continue to favor the Japanese yen going forward. Now, in as much as the path of least resistance is to the downside, we cannot ignore that the US dollar too may have some form of rebound ahead of the weekend, like we had some strong US PMI and labor data, which I talked about at the beginning of the session, which could be a driving force for a rebound, which I doubt at the moment based on what is going on. And if Fed officials push back on rate cut expectation, the US dollar could get a rebound. So we're looking forward to hear from speeches from, we have three Fed officials speaking today. We have Musalem, Schmid, and of course Cook, all of which are going to be speaking. And if there is a pushback on rate cut expectation, well, we could see the US dollar rebound, so temporarily in the meantime. So as it is right now, what are we going to do? How are we trading this USDJPY for today? Well, we have a simple structure. I'm going to be extending that a little further to the downside. I think I'm going to be holding on to the 143.00 level, somewhere right here. A crucial juncture in this market. That level had been a support line in the past, and right now we've seen price break down the structure. And one interesting thing about this old structure is how it also shares a confluence with that descending trend line we have here. Now that price is below the descending trend line, we've had price break down the previous support line. This old support line could now turn out to be a resistant line. So what we are looking forward to right now is for price to come back, retest the structure, and at this point, the emergence of selling pressure around or below the structure will incite the second leg of the bearish move. So that is what I'm looking at the moment. So what I will do now is to place an alert on this trend line so it will notify me as soon as price get there, that I need to sell. Look out for selling ideas around that area. So if price comes back into structure, I will scale down into my 15 minutes time frame to look out for signs that buyers are finding it difficult to climb back above the trend line, and this will reflect on the chart as continued selling pressure. Then we could place a sell from that particular area. Now, if buyers are able to break out of the structure and we see something like a breakout, then retest of this trend line, this trend line could turn around to become a platform that could push price higher. So let's take note of that. A breakout retest could push price higher, and this could trigger buying ideas above the 143.00 level. So if that happens, then we will look to add more buy position at the breakout of the 143.600 to maximize the potential of that bullish move. So let's be mindful of this. We need to be very cautious, of course, especially if intraday sentiment flips. For instance, if the Fed officials go hawkish, or we could see data surprises, traders may start considering scalping buy positions from above this descending trend line. But the broader structure of this market is still in favor of the Japanese yen. So let's see how this is going to play out. If price comes back and retests the structure, I'll be very, very glad to join a sell. But if it just continues from here, maybe we could look out for a downtrend continuation pattern on the 15 minutes time frame, maybe a bearish rectangle, pennant structure, or a bearish flag where the breakdown of the structure will welcome selling ideas. Let's look at the 15 minutes time frame together and see if there is any structure unfolding there. So we have nothing yet around this area. So if we see a downtrend continuation pattern, that is, if price does not go back to retest the descending trend line, we could position ourselves for the downtrend move. So the path of resistance remains bearish, but anything could happen. We could see sentiment shifts, especially if the Fed officials go hawkish. We could see price climb back above the descending trend line. So this descending trend line here is going to be playing a significant role in guiding our trading decisions today. So I encourage us all to mark out the structures accordingly, as we are going to be using them to navigate this market today. So I wish us all the best of luck on the USDJPY. And if you have any questions whatsoever, feel free to let me know in the comment section. Like I usually say, no question is insignificant. Ask me anything. I'm here and willing to be of help in that regard. So let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in, and do not forget to give the video a thumbs up. Thank you very much, guys. As you do so, I'm yet to receive any likes so far. Please, the more likes we have, the better the chances of this video reaching a wider audience of traders. And at the same time, it also inspires me to continue to do more of this. So I look forward to your feedbacks. Click on the like button, and thank you very much as you do so. See you soon. Okay, so in the absence of no questions, I want to assume that we are all on the same page. So, with that said, let's move right into the final asset on our watch list for today. Stay tuned. So before we go to the final asset, I just saw that the sell position we took on the US All Spot is already in profit, and I advise us to move stop losses to at least break even at the moment. I just did on my own end here, move stop loss to break even level, and let's see how this is going to play out. So if it's turns around against us, the worst case scenario is going to be at break even. So I just needed to inform us about this quickly. All right. So moving on to the final asset on our watch list. So the final asset we are looking at here is my favorite amongst them all, and that is the XAUUSD. I've already missed another chance this morning. I missed out on that consolidation phase. This is due to the internet issues that have been witnessing here, but thank goodness we are back on. And right now, gold is thriving strong above that 3,300 level as credit downgrade in the United States, recession fears, and fresh geopolitical risks continue to drive demand for safe haven assets like gold. Now, this morning, while I was looking at this chart, I've done pretty well on this asset this week. I was part of a massive downtrend during the first half of the week, and during the second half of the week, we also saw some bullish momentum begin here. Sorry, the first half of the week was more of, yes, we had a sell, then price continued to rise to the upside here, and looking at the structure here this morning, the first thing I noticed here on the 1 hour time frame, which is our execution time frame, is a shift in the dynamic from last week. So last week we saw price drop down into the 3,125, and then we saw price begin to find series of higher lows, as you can see, resulting in this beautiful ascending trend line here. And you know how we use our ascending trend lines, of course. As long as price remains above them, we shall continue to look out for patterns and structures that support buying ideas. Now, what are the factors behind the scenes that continues to favor the demand for gold? The escalating U.S.-China trade tension is still very there. The killing of Israeli diplomats in the U.S. and Putin's perceived confidence in the Ukraine war all fuel safe haven demand for gold. Besides this, the Fed rate cut expectation is also gaining ground despite the strong US data we saw yesterday. Market are still pricing in further easing from the Fed, which weakens the US dollar and makes the gold commodity more attractive to investors. Then to further add salt to injury is Trump's adding 3.8 trillion US dollars to the US debt. which has right now deepened concerns about America's physical health. And this is obviously a long-term bullish force for the gold commodity. And for me right now, all roads leads to the upside. So what I want to be doing right now is to look out for patterns and structures that will help me continue this uptrend scenario. And for the fact that the dollar is still struggling to build on momentum despite the upbeat PMI and jobless claim data we saw yesterday, I think I showed you here yesterday. We saw a very good initial jobless claim count. We saw the S&P Global Publication coming in above 50, coming in above what the market participants were expecting. Despite all of that, the dollar could not gain traction. So for me, all road leads to the upside at this point. So I want to be looking for sustained breakout of structure at this point in time. Now, looking at this chart here, this was the structure I was able to come up with this morning. So I had a resistance line at 3,345 before the live session. This was the highest point price action has been for this week. And prior to that breakout, we had a consolidation phase here, which lasted about 5 hours. I obviously missed out on that opportunity. For those of you who took it, well done, kudos to you. So if you are taking this breakout of structure, please, you do want to be moving your stop losses right now. Secure some profit as anything could happen. Remember, we are on the final trading day of the week, and it is expected that market participants may start rounding off their trading activities ahead of the weekend, and this could result into some profit-taking activities. Maybe those who had capitalized on this uptrend scenario may want to start taking some profit off the chart, and this could lead to a temporary pullback to the downside. So it is advisable at this juncture that we move all stop losses and secure the current position. So now, scaling down into the 15 minutes time frame, I want to look out for a pattern that will help me navigate this market today, right? So I want to push this in a little bit so I can see things clearly. So if we zoom into the structure, this is what you will see here. So we had a consolidation happen for about 4 or 5 hours, right? So we have this whole situation here between the 3,333. So I want to use a different color to emphasize its importance. So we have the 3,333 level, right? So there you have it there. And then we have hold on a second, we have the support line of this range bound structure somewhere around the I'm looking for psychological level here. So 3,323. So it's like a $10 range bound structure before price broke out of that structure. Now, what the situation we have here, is it possible that we see price come back to retest the structure that was broken, especially after noticing this doji candle around this area? It seems there's a little bit of indecisiveness around this particular area. Now, what will this turn out to be? Is it going to be an uptrend continuation pattern, or a reversal setup that will bring price back into the structure? So if it brings price back into the 3,333, I want to see signs of buy pressure around this area for me to continue that uptrend scenario, right? But if that is not the case and price just continues to move from where it is right now, how do we be part of that move? Let me see what is going on a much lower time frame. So okay, so we have something here, a little bit of consolidation. So let me just put a buy stop order here. I've made enough this week on this market, so I can afford to risk something here. So I will place a buy stop order right above the 3,353.50 and then place a stop loss right below the structure, giving enough breathing space for price action to move around, right? So I move. All right, so there you have it. I'm placing a buy there. Then if price will break down this level here, so in fact I want on this 1 minute time frame, you'll see that hold on a second, we have a resistance line here, and then we have a support line somewhere around here, right? We have a support line somewhere around here. This was a resistance line, support, 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 support. So break above the structure will be looking promising to continue the uptrend move. That is if price does not break below the structure. But if it does break below the 3,344.50, then we could be seeing price drop into that structure I said earlier. That's so I want to place a sell stop order here. Just making sure that I'm on standby for whatever opportunity the market presents. Okay, so I think there's a sell stop here. Okay, so I'm placing a sell stop below the 3,345, right? So if price drops, I will, from here, I have my TP somewhere around the 3,333. Remember that level. I will show you again when we scale 3,333. What an interesting number that is. Okay, so let's go back to the 15 minutes time frame so you can see what I'm talking about here. So this is a 3,033 here. That was the level that was breached and broken to the upside. So like I said, if price comes back to retest the structure, we could be seeing another wave of bullish momentum happen from there. So I put my TP for the sell around the 3,333. So that dovetails to about 120 pips thereabout if price moves that far. So that is what I'm looking at on the gold commodity for today. And if price breaks above this range bound structure here, then we already on standby at the $3,353.80 level to capture that uptrend continuation. So that is what I'm looking at, a simple trading setup we have here on the XAUUSD. So I encourage us all to mark out the structures accordingly as we have illustrated. Let's see how the market will play out. And of course, if anything new comes up, I will definitely update us on both my Telegram platform. So I want to wish us all the best of luck on the gold commodity. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Money Mastery. Stay tuned in. All right. So it's on this note, I guess we have come to the end of today's Forex Money Mastery. Though we started very late, but it's how do they used to say that again? Is better late than never, isn't it? So at least we have an insight of what to look out for on the asset we are monitoring for this week. That is the USOILSPOT, the USDJPY, and the XAUUSD, all of which we were able to identify simple trading setups that will be guiding our trading decisions today. I hope you all marked out the structures accordingly as we have illustrated. If you have done so, well done, kudos to you. So all we just need to do right now is exercise patience and allow these structures to mature. And for those who joined us for the first time, you're highly welcome on board. Very excited to have you around with us today. I do hope you gain a couple of things during the course of the session. And if you did, don't miss out on our subsequent editions. The next one is on Monday, 8:30 a.m. UTC. That's 9:30 a.m. West African time. And of course, before Monday's session, we are also going to be running the Forex market prep, which is a Sunday ritual where we come together, and of course, you decide which asset we should analyze and dissect for the week. So don't miss out on the Sunday edition of the Forex market prep. So I want to wish us all the best of luck today. And trust me, if anything new comes up, I will definitely update us on my Telegram platform. And it's on this note, I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening and a beautiful weekend, everybody. Bye-bye.